Yes, a lot of these elements had been telegraphed in advance there by the new government on the budget. We know they want to make some adjustments. They're targeting the deficit that will be more than 6% this year to bring it back to 5% next year and reach the 3% limit by 29 instead of 27 previously. So some of the adjustments, 60 billion euros from some spending cuts and tax hikes, particularly, as you were mentioning, Karen, the extra corporate tax on the largest companies, the ones that have more than 1 billion euro turnover. So that will affect about 440 companies in the country. So it's supposed to be temporary. We'll have to wait and see whether it is actually temporary. A new tax on the wealthiest individuals as well. New, less civil service, new tax on airplane tickets, private jets. So we have to wait for the details. But these were the kind of the shopping list from the French government. Two elements that were quite interesting is that they mentioned there was also some cuts on some healthcare costs, and they mentioned lower reimbursements on some medical care and lower sick pay. So this is kind of politically quite risky. And another element that's quite politically risky is the planned increase on pensions that index on inflation that will be delayed to the middle of next year. And these two elements are politically quite heavily charged. We know the pension one, for example, is a red line for the far right, the Rassemblement National. And we know they're instrumental in whether this government is toppled or not, as we saw in the vote of no confidence earlier this week. So we have to wait and see how the debates go. They will start on October 21st. The government saying they're happy to hear for other suggestions to try to tackle the budget. But again, from some of the notes that I saw this morning coming out of the first analysis on the budget, particularly Goldman Sachs this morning saying that this budget seems to be less skewed towards spending cuts and more geared towards tax increases than anticipated. So instead of two-thirds, one-third, like Barnier had said last week, it looks like it's more 50-50. So they will rely on tax increases more than expected. And Goldman Sachs say again, this means that the tax-based consolidations tends to have a lower chance of succeeding going forward. And again, politically, more taxes is a tricky one for this government. So all these elements will be at play. It's a tough cocktail out there.
Charlotte.